The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, David White, the koala bear of Wall Street. No wolf here, just one big, cuddly little bear, eating my eucalyptus leaves and pontificating about the market and digressing at the beginning of the show. Anyway, we've got the S&P off about 16 points as we speak, about 2 billion shares, just a hair under as we start the show. Been a very, very slow meltdown most of the day. Got a little bit of energy starting at about 1:30. And I haven't watched the news, so I don't know if anything actually did come out. I've been watching a huge amount of divergence in the marketplace, and we'll be talking about that as the show goes along and other things. But certainly we are at that we're at that 1868 level, and that's what I called the line of death. And or we could use the political term, the red line. Of course, red line didn't seem to mean much to despots all over the world. So maybe the red line probably not a good idea to talk a lot about. But what we do have is a market headed lower. Volume has kind of picked up here in the last 40 minutes. And part of that is a little healthy skepticism for what's going on. I noticed that Apple was having problems today, and we'll take a look at that. IBM and some of these other ones look like maybe they've at least a short-term topped out, and we'll see how that goes on. Of bigger things of mice and men, there are a lot of rumors being passed around today that we will see the Alibaba red herring out later today. If you're not familiar with IPOs, the red herring is the preliminary prospectus before it gets all fixed and all the rest of the stuff's in it. So it's kind of the basic template for what will be the prospectus. And the prospectus, of course, is the way to keep from getting sued. Basically, you say all kinds of stuff in it, like if an asteroid came and killed me, then maybe that would be problematic for the business. Maybe if the Earth was eaten by giant alligators, that would be a problem. Basically, you cover all bases, but it's not that ridiculous. You basically say, okay, if you're Facebook, maybe the teenagers don't love us anymore. Maybe they're not really to give a group hug. Maybe there's legal changes afoot. Maybe the U.S. government will not accept our accounting, which I think is probably going to be the problem, getting this thing out the door. But who knows what the answer is? As I've said on the show before, I've called the SEC twice. They never call back. I've emailed them. No one's going to say what the deal is for letting these Chinese companies go public. So, what do we have here? Speak of the devil. Come on, I'm declining. I don't know how much more I can decline. I forgot to set my little thing up before I started the show today. There's a great application, as I digress here again today. If you have Android, it's called Shush. And maybe I'll show it to everybody right here. But basically, if you silence it, if you run this application, maybe I can hold it up there. It'll allow you to actually change what you want to do and automatically turn back on the ringer when you're done. So in this case, I'm going to say shush for an hour, So it actually will start ringing in a little bit. This is basically as soon as the show's over. Should have done that. I just forgot it. But anyway, Shush is the name of it in the Android store. I'm not one of those Apple heads, so I can't tell you what's available on iOS, but I like Shush. Very good for going into a movie theater, because I always forget 2 hours later to turn my phone back on. And you set it to 2.5 hours, and it automatically turns the ringer back on. And a great way to do it. Anyway, we are toying with this 1868 level with the S&P. We got to 1869, so we're going to be watching that closely during the show. Volume kind of slowing down here a little bit. But, of course, tomorrow we go into the next expiration cycle. So we've got about 7 days. So looking for a bit of volatility tomorrow. And most of the time you see the low of expiration cycle in that tomorrow. I'm betting that we don't. But probably 8 out of 10 times you do. If you don't see that low of expiration tomorrow, normally there's some significant downside in the markets. And of course, being May, a significant amount of destruction happens in May. Even though people say sell in May and go away doesn't work anymore, I am not one of those that believes that to be true. Anyway, having a great day out here watching this market come down. Probably the most important thing I see out here is the dollar index off almost 40 cents at 79, what is it, 79.15. And the market still doesn't like it. So there's something bigger going on. I'm not exactly sure what. When we look at the 10-year, certainly interesting to see that and telling us what's going to happen in the future. We like to start off a little bit of history in each show. And, of course, in 2010, when a $4.1 billion trade went rogue on the NYSE, it resulted in the loss of the Dow Jones Industrial Average of over 1,000 points in, about 20 minutes? Then a rise to approximately the previous value, all over about 15 minutes. And, of course, I shorted it, and I think just about everybody here at TFNN did. We all saw it, and it's like, okay, it's going to go down and test that low, and it did that and worse. Of course, one of the reasons I bring this up also is there's somebody new on my let's say brown list, and that is the Mary Jo White, who's the new head of the SEC. We'll get into that in a second. But I was asked a month ago why I thought Goldman Sachs had flipped on the high-frequency trading and said that they were going to get rid of that area and everything else. And I thought that there were enough new players out there that the market had found a level of homeostasis. That's where finally there's enough people back in there, and some people have better or worse high-frequency trading systems. But some people will get at least some of those orders. Some of the people won't, depending on geographical locations. But the heyday, the true golden era of high-frequency trading was probably over. What I did see today was several articles, and someone actually brought it up on CNBC this morning, and that is that the big street names, the profits in these high-frequency tradings, are off about 85% of what they were about a year ago, actually 14 months. For some reason at that point, 14 months ago, must be new entrants or something else, dramatically changed the market. And high-frequency trading profits have been going down pretty linearly since then from people that went on it. So anyway, interesting thing, but of course, in my stupid or liar segment today, in what do we call it? I guess I call it testimony in front of the House. It was a Representative Capituno. I'm going to say I can't pronounce it, but in my opinion, this is his quote, "In my opinion, the SEC's most important function is providing confidence for investors and the general public," said the representative. accusing White of dragging her feet on its investigation, the seeming constant erosion of confidence in the SEC to actually do the job, the main job, all that's required it to do. So, liar, pants and fire. Oh, I spelled liar wrong. If we don't believe it, he said, you may as well not exist. And the reason I'm bringing this up is that once again, the head of the SEC ignores NANEX and all their efforts to go back and actually figure out exactly what happened on that flash crash. Ignore it, wander down the street, do everything but find something to actually fix it. And so my question is, Mary Jo White just stupid, or is she a liar? And I'll change that to an A from the E. And other than that, what can you say? One thing I do want to know is, I probably can't see it very good there, but why does she have the same haircut that the Three Stooges Mo has? You would think that maybe she has just a little bit better barber out there, but hard to say. But it is interesting. But all I can think of is she's ready to cash it in one more of these stooges in Washington, D.C. that sees no evil, hears no evil, and wants to know about no evil, even when you give them definitive proof like NANEX did on those reports. So anyway, what do we have out here? But yeah, she could be the sister to Mo. I can't remember his last name now. Mo Woods? No, what? They were funny. She's not so much. Of course, I talked about that yesterday. Nothing new in here. So we're going to go right on to some other things. We've got a minute left in the segment. Trading out at 1871 on the S&P cash. So we'll keep an eye on that for the moment. But just can't say how disappointed after I read the transcript of her in front of the House, basically trying to say everything, but they knew exactly what the problem was. Anyway, we've got lots of stocks moving out here today. I wanted to look at Apple, a very interesting movement out here. Of course, it hit 600, went to 604.41 today, and now kind of pulling back underneath that. What do I have out here? 596.70 is the last tick I show. But boy, talk about a pretty specific pattern of breakouts on earnings. Even though this was financial engineering, see a lot of indecision over the last few days. I'm looking for this thing probably to pull back to that 565 level. And as it does that, we'll check it out. Anyway, you can give me a call at 877-927-6648. You can email me at path@tfnn.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, we were having a little bit of discussion in the den during the break. And question, I guess, is what's the long-term hold on Apple look like? And there are some great comments in there, but I'll go through the headlines out here. One, their margins on their phones are starting to slip. They've already kind of lost the high ground on tablets. They have two new products that are rumored to come out, the iWatch and another one that's probably not going to be that big a deal. Right now, they're spending a huge amount of money hiring doctors. I guess they think that they've got some kind of deal locked up to put all of Obamacare on a tablet. The question is when that product comes out. Of course, they've got to win a bid and get some spending for that. Maybe they've already got that locked up. They have been very active with the party in power. So maybe they've got the inside track on that. But it is a very interesting market. But to tell you the truth, for the rest of the summer, I just don't see anything going on out here. Somebody IM'd me in the den and said that they're going to use their stock to hold this company up for the next 10 years as they exit stage left. And, of course, the CEO gets $500 million if he can keep this thing above a split-adjusted $500. The fifth year that he is the CEO, and he's got a huge amount of stock options that says he's going to do it by hook or crook. I just suspect we probably see this thing somewhere in that $500 or $600 range for years to come. Very hard to move the needle with the kind of money that they make, and just makes their margins look weak on just about everything else. Of course, Apple TV has the same problems that Netflix has. Netflix, of course, though, doesn't make any hardware. So they have kind of a higher level of problems if they're going to make both hardware and software to play back video. It's hard to beat the Chrome app and the dongle from Google. I've got two of them, and for $30 a piece, pretty sweet. And I use my tablet for nothing but the remote control. Anyway, as we come back, as we said, we're going to look at this market. We are toying with that 1868 level. We're at 1869 right now, 2.1 billion shares. A lot is going to tell us what happens off of this top and into the close today. So we are going to be keeping an eye on that. I will say that, I wanted to look at IBM too. IBM had kind of had an interesting bounce out of this market. I think we talked about it on Friday in the show. This thing is probably headed down into that gap. And we did get into that gap today. Not a lot of volume out here today so far. But we're going to have to keep an eye on this thing. What is it printing out here right now? IBM, I guess right at 190. So they are trying to support it at this area. The question is whether or not the market will hold up. If it doesn't, we're probably looking at this thing going to 186, 187. I think just the market weakness out here is enough if we close lower today to probably bust this thing down in and test the bottom of that candle from the 17th where you had 11.2 million shares. But nice moves out here in most of these. What else did we look at here? IVB, very interesting setup out here. This thing spent a lot of the morning trying to break out. One of the things I wanted to show everybody on this was the very, very good level of confluence resistance to the upside that comes right in at $230.93 to $233.43. Of course, kind of got into that yet again today. Certainly not a lot of volume in these setups, at least today. And you don't like to be pushing these confluence levels without much volume. We certainly have a high volume low out here at 207.48. And that's what I'd be betting on, that this thing comes back down to that 207 level, or at least awful close into that candle. And we just see how much is actually there. You got, I think this thing probably at least is going to bounce down to the 220 level on any failure in the general market. We'll be back. Anyway, we'll be back in just a minute. Give me a call, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we get back, somebody in the den made a nice little list of housing stocks out here that are problematic, at least today. Not a whole lot of volume down today, especially when you look at the previous big candles out here on Beacon Roofing, BECN, but certainly down nonetheless at that level. When we look at DH Horton, this thing gapped up. I think that was on earnings out there. It looks like it's getting ready to go back into its gap up and take a look at it. Not much volume on that today. Lennar, another one of these that looks to me like it wants to come back to that gap at 36. When we look at lumber liquidators, this thing's been working its way down. Of course, it's got a few legal problems with importing wood, but needs to come out and test that low at 78.92 from April 30th. We look at Pulte Homes. Thing has already broken the previous low with higher volume, and that's the 1821 of January 27th. It's come into that. You had some nice heavy down days in the 8 to 9 million share line. Not that heavy to bust through the first time, but doesn't look all that good. Toll Brothers, another one down, light volume. So most of these look to me like a bullish sector, but in a giant pullback, so somewhat problematic. Of stocks reporting, Just make sure I didn't actually get anything else. Oh, I got a whole bunch of people that want to look at some different things. So it appears to be in a larger scale XLF on 1 minute chart. Doesn't give us any insight. Dustin in Nashville wants me to look at the XLF real quick, and we will. To me, it looks like an ABC down. Financial select sector picking up a little bit of volume from yesterday, but I think a good chance we go test the 2119 at least, and then figure out whether you want that. What do we have? 22 A, B, and this would be C. So we've done a 68% retest of the original ABC, and then got a nice little setup here. Let me zoom in just a little closer for everybody. But you got a nice little setup into an ABC. Not a lot of volume, but certainly more than yesterday. But that would take you on the XLF to $20.73 on just a 1-to-1 ABC. So that wouldn't be too bad. You got a low out here at $20.50. It's a high volume low. Pretty good to bet that you're going to at least test all of part of that candle. And when we look at that day, certainly a big volume day out there with 105, a little over 105 million shares. So I have to think that you know that XLF, especially every one of these banks, looks so horrible. From the den out there, Amazon below $300 again. This thing got to 288. Let's get out of that for just a second so we can look at that. Again, not a lot of volume out here, but looks to me like Amazon is ready to go to that 279.33 low from August 28th of last year also. So we got a lot of stuff moving out here. Let's check back into the market already in progress. 1870 on the S&P cash, 2.15 billion. So after that little jaunt down to 1868, we've had a little pop, but again, a dearth of volume since then. So we'll keep an eye on that. I want to look at some other earnings stocks out here. KWK, which is Quick Silver Resources. That's a silver company, I'm pretty sure, isn't it? I should know this right off the top of my head. Oil and gas, excuse me. And this one's down fairly decently for a low-priced stock. What do you have out here? Did BKR top? I don't know. That's a hard stock to ever BKR, right? BKRB. BKRB. It's a hard stock to actually find. I'm trying to remember what it is. Berkshire Hathaway B, is that what that is? C? That he's asking about? Berkshire Hathaway, yeah. BRK dash B, maybe? Yeah. I'm not picking it up. I don't know what the symbol is on my system for it. Could be interesting. Okay. Oh, anyway, let's go back to Quicksilver. That is a independent oil and gas company. Let's go back to that real quick. And kind of in no man's land out here. Hard to tell. Certainly was not strong on the way back up. You had that one huge flyer out here on April 29th that set the high, pulling back down to that low. This thing just looks like in a huge trading range from about 350, 360 back to 238, but certainly not a lot of energy back up when we came. You had basically a couple of days with a high volume, and then this thing rolled right over. See what else we have out moving here. New Skin came out with earnings this morning. This one, big, rather boring consolidation. Of course, they had a few legal problems. That's what that huge gap is. They've got two gaps out here. This thing's probably setting up to make one more huge monster gap down. That you got gap 1, you've got gap 2. My guess is that this thing comes out with some bad news. Probably would gap down to about $50. I don't know when that gap's going to happen, but this does look like a 3-gap play on the way down. What else do we have? MSO, Martha Stewart. And this thing's solidly below $5, so you really can't short it anymore. But a little bit more volume out here today. Looks like it's going after that $3.79 low from April 28th, just a few days ago. So not a whole lot in there. Let's see what we had for winners on this day of earnings. See if I see anything out here. It really looks interesting. Bunch of no-name stocks I've never heard of. DirecTV, one of the few. DTV. Of course, this popped on the belief that maybe AT&T would buy them out. Maybe more rumor than anything else. On earnings, back up to that high on the pop from the first out here, and certainly has the volume, but doesn't look like it's finding a lot of room to catch anything. Let's go back and look at some of these others that came out today. And again, so we got XLF, EUO. Okay. EUO. And that's Mike from Maine was asking about this. Boy, did this thing look very good at one time. But boy, is it down here testing its lows with higher volume today on the ProShares Ultra Short Euro. And, well, you're down here with higher volume. So what can you say? What do we got? Yeah, still got the dollar index at 79.13. So I don't think a lot's going to change after that. Now, maybe could you bounce, come back down here with lighter volume again? But I don't see any play right now. I certainly like this chart setup, though. Maybe if you bounced, came back down here and had about 500,000 shares at $16.50 again, maybe that would be it. But yeah, this thing is looking awful good. Problem is, it just needs one more test of the low on lighter volume before you can pull the trigger. So Mike from Maine, patience. Gap fills. Looking at short XLF. Agree, yes, Jerry in Boston. And ANV from a long perspective. ANV, we'll take a look at that. Allied Nevada Gold. This thing needs to come down and test $3.01. I don't like that this thing had 4 million shares on May 1st, coming down with 2.8 million shares today. So probably going to get into that room. You need this thing to go below $3.01, and I like to see 2.5 million shares or just the volume really dry up in ANV to really give some kind of buy signal. None of these stocks in the gold sector and miners really looking that good to me. But we can do. What else do we have out here? What was that? New Skin, UFCS. Take a look at that. UFCS. United Fire Group. Don't know much about that particular stock. New Skin. And so Time Warner. The Death Star, the new Death Star, or Towers and Watson. I thought TW was that. Well, this is a very interesting stock, coming back down and getting ready to test the low of $98.50 from February 6th. Symbol is TW, Tower and Watson. Interesting company, but doesn't look like it's working well with earnings today. It's going to blow through this 101.92 probably in the next day or so. And we really need this thing to look at 98.50 and come in there with a lot lighter volume. But very interesting. You're going to need some consolidation out here on that one. XLE. I tell you what, though, Today, I was talking to Andy just before the show. Someone's asking about XLE in the den, Peak D in the den. And one of the things that was happening in the VIX today was a horrible divergence. I thought I was going to talk about that earlier and almost forgot. And the divergence was the VIX was being pushed down by massive call buying in the energy sector. And that's normally a good sign that you've hit some kind of top. So if you are looking for a play out here, everybody's on one end of the ship and not very many people on the other ones. Energy is about 30% of the S&P, and the call buying was so massive for all these energy companies, energy ETFs, everything else, that it was horribly skewing the VIX today. I think that's pretty much come off that in the last couple hours, and now we're getting a much better reading. Let's see what I have here for the VIX out here. Yeah, it's a 53, a little more now. But starting to see at least some of this stuff come back around. And I guess it's probably going to be a lot about how this market closes and what the VIX does beyond the end. Get IBM, Apple. What else do we have out here moving around? Got some nice movement in technology. We'll take a look. Oh, I still have 2 minutes here in this segment going along. Let's see what else we have. I wanted to do just a little bit look at what's happening tonight. There's, again, a ton of stocks. Oh, hang on a second. A ton of stocks coming out after the bell tonight. And let's see, maybe FYE was actually this morning, FEYE. This thing is down again horribly today. I thought earnings was out after the bell. What do we have? No, it is after the close. So this one's getting pounded yet again, like a redheaded stepchild. This thing hit its high mostly at 97.35 on the breach of Target's financial system. This thing really started to run up. First hints of this thing when it really broke out was that January timeframe when the Target CEO had to come to God, and this thing really ran up 97.35, and it's come all the way back down, and even heavier volume out here today. So I'm wondering just how much money they did have, but this thing's already down heavy. And what else can you say about that? But earnings after the bell, so you might be wanting to keep an eye on that one. Jive, Jive, another one down at 7% today. Not so bad. Needs to go after this $6.84 low from April 15th. A little higher than that. And you got 1.2 million shares. Going to come into it, looks like, with about that much volume. So you want to keep an eye on Jive after the close tonight for earnings. We will be back in just a minute. You still have plenty of time to give me a call. 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
And as we come back, still printing off 1870 on the S&P cash. Very, very light volume as we're down here. So the question is, what the last 30 minutes of this day going to be like? Off of 14 points as we speak, but 2.25 billion shares. No volume up, not a lot of volume down. When we do move, we do get volume on the downside. When we go up, the volume is fairly consistently light. So I'm going to be on the bearish side of this for a while. Some of the other stocks looking interesting today, or at least starting to give some news out here, and that is Bed Bath & Beyond. This thing gapped down, huge volume, tried to get back up into its huge gap down candle of 17.5 million shares on the 9th of January. Got into it with 3.2 million shares. That's a big no. Not going to work on that. So comes back down trying to bust the low. And you didn't want to see anything approaching 3 million shares. And, of course, over the last few days, 2.3, 2.4, 2.6, 2.7, 1.7. You had some light volume days out here, but today 1 million shares. So if this thing would pop back into the 62.12, you might have a little trade on this. But, of course, you had yet another gap down on the 10th, and it's going to run right into that. So maybe another bounce up here. Maybe this consolidates and starts working its way down. But these stocks don't go straight down or go straight up for the most part. But this certainly looks weak, and you don't like to see that kind of volume busting that previous low. Of course, the next real big step down is this high volume low at 54.33 on Bed, Bath, and Beyond. And only God knows what's beyond the Bed and Bath, I guess. Maybe you go through that back door of the store, and you'd find out. But starting to see a lot of stocks have some weakness. Again, we've talked about Apple and IBM. Really not showing a lot of love to the market out here. Some other stocks of interest are the ones that are coming out with earnings after the bell tonight. We talked about what did we talk about? Talked about FireEye having a problem even before earnings jive. EGAN, E-G-A-N, is another one out here. Let's take a look at this guy. Well, EGAN, not a lot of volume in this one, but boy, not looking good ahead of earnings. It does have light volume, but the previous low out here at 589 is problematic. OCLR with earnings after the bell. Well, this thing really looks like it's already busted. So what do we have here? Maybe this thing will give you a gap back up. Not a lot of volume so far. But Oclaro, OCLR, one of these stocks that does look like it is busted. Certainly under the 3x3 or 9-day moving average. What you'd like is for this thing to probably come back up. But what did it went from $1 all the way to 350? My guess is this thing's probably going to work its way in a hurry back down to that $1.50 level where this thing took off. And at that point, maybe this thing will consolidate and you'll get yet another swing at the plate or bite at the apple. I'll try to figure any of these out. Anyway, we've got our man, Andy Heck, coming up. Maybe he'll explain how commodities are moving, why everybody was buying massive calls today in the energy sector, only to see that XLE roll off. But it is a very interesting market, to say the least. Anyway, we've got Jaws following this program over most of TFNN. Anyway, hang on. See you tomorrow. Same bat channel, same bat time. So when you can, help me have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.